Good morning, good morning. How's everyone doing? Well, here we are. There we are again. Another news cycle, another gap down, and gap fill. Now, some people say the gap's not filled because it hasn't tagged the close yet. I consider it a gap fill when we're back in the range. And that's the way I was taught by the old market profile guys. So basically the way I interpret that, and the business reason for that interpretation is such. See, when you open in the previous day's range and cost basis, it's business as usual, right? Business as usual. When you open outside the previous day's range to the bottom or the top, that's change. So does that change continue or does that change come back into the previous day's range? That's the way we look at it, right? So say you're selling something at 50 cents the previous day. The next day you open at 40 cents. I don't consider that a gap, right? Say your range, the top of your range is 80 cents and the bottom of your range is 20. You open at 40, you're still in the range of business of yesterday's prices. So that's the way I consider it. Now you guys have island gaps and nacho flavored gaps and Cool Ranch gaps and all that sort of stuff. I don't pay attention to any of that. It's either in the range or out of the range. I just like to keep life simple. So we're back in Friday's range, although at the lower end of Friday's price area. What I'm looking at is this 6017 level, and we'll see whether or not we can get above it as we go into RTH. You know, we had the news cycle which created that gap down, right? And that gap was helpful for anyone who's caught short above 6032 to come in and do some buying. Now, there's something to be noted here in that both times now that we've opened underneath 6,000, the market has been bid up. Do you guys notice that? Even on, this was that Juneteenth holiday, half day profile. Yesterday's news last night, which caused a gap down open and a subsequent move up. So that tells you that there are bids under here. Now, why would there be bids here? Well, let's not forget that there's a gap here, right? There's a gap and there's another gap here. So you have multiple short positions underneath the cost basis that was being distributed. So when you come back into cost basis, you are naturally going to see bids. And if people are short down here, they're going to front run. Because listen, if you're short a sizable amount and you averaged up over 6,000, right? When the market comes down underneath 6,000, there's an opportunity for you to take some risk off the table, right? And that's what we're getting tonight. That's why we have that profile that is shaped like a P. That's a short covering profile. And anyone who shorted the open of Globex yesterday is trapped underneath 59.92. Pretty simple. Okay? And as you can see, price is creeping back up. Overnight inventory in and of itself is 100% short because there's Friday's close. Every single trade and transaction is underneath Friday's close. So we're still looking for a correction upward, at least to see if we can hit the close. Okay? Now, there is going to be some selling because we have trapped long inventory above, and those people will naturally sell. Let's see what kind of buying retention we get up here. The concept of buying retention is never spoken about in, I've never seen it spoken about in any market trading room amongst retail traders because they don't know what it is. Buying retention is used by distributors when they sell, say I sell 5 million shares of stock between $5 and $6. If the stock breaks $6, what is the percentage of people who bought that stock that are going to flip out? What is the percentage of people who are going to hold that stock? Right? So that is buying retention. Say I pay Raj, Raj and Jerry and Jiraj, say they're 3 promoters that I hire. Right? And they say, listen, JJ, we can put away 1 million shares between 5 and 6. We've got buyers for you, right? So, that's, you know, let's say it's $5 million worth of buying that they're going to bring in, right? So, you know, I'll pay them $1 million in cash to bring in $5 million worth of buying, so I can sell $4 million worth of stock. That's, by the way, how this works, you guys. When you guys are trading those small caps, someone has been paid to bring the buying in, to get you guys to come in, right? I know because I used to pay them. And I also used to get paid to do it. So, both sides of the coin. So, if these 3 guys bring in 1 million shares of buying, and then the stop drops under $5, how sticky is that buying? So that's what we're asking ourselves right now, is how sticky is this buying? What percentage of these people that are long over 6,017, what percentage of them are going to hold? What percentage of them are going to dump? It's always something I think about, is buying retention, especially in these markets, because the U.S. stock market, if you take a look at it, it's pretty sticky, right? Because the way it's structured, the way the U.S. stock market is structured is that people buy and hold. Size institutions like BlackRock, Vanguard, they buy billions of dollars worth of stock. It's paid for in cash. So the repo man's not going to come and get it when there's margin calls, right? And it's being held for decades because it's an investment. So always remember that, folks. Let's see what's going to happen tonight. Should have some decent trades. I think margins are back to normal now. So I did my balance zone on the Globex Open. I did a session last night for you folks. It's on YouTube. Check it out. It's 59.79 to 87. And now we are in pure distribution. VWAP is at 94. And we are just simply distributing above VWAP. right? The overnight position is here. It is being distributed here. For those who watch the point of control in market profile, we'll look to see if that moves up to show good distribution, right? So these are big balance zones. I want to see if they work. They worked last night. Let's see if they work this morning, right? Hey, Doc, how you doing? Yeah, I'm looking at that area too, right? Listen, I'm not opposed to lower prices, right? I think this market needs a good sell-off and we'll get much better price action. When's month end? Oh, crap. Now, the end of the quarter is this week, isn't it? Rats. Yeah, end of the quarter is this week. Friday is the last trading day of the month. And Thursday will be month end. So, govern yourselves accordingly. They really do not like to have a mark itself down at the end of the quarter. So, the question you have to ask yourself is, was last night the only opportunity for traders to get some cheap product? Let's see, right? Let's see. I'm not a fortune teller, so I'll just let the chart tell me, right? In any trading situation, unless you control the supply, right? Unless it's your stock and you own every single share, right? And you're the distributor, there's no way you're going to be able to tell what it does. And I'll tell you something, after doing 200 deals, even when you do own every single share in nominee offshore accounts, right? Even when your client owns every single share of stock, you still are beholden to order flow. And order flow is a cruel mistress because if the order flow doesn't support your agenda, you're in trouble. Always remember that when you're a trader, right? No, you don't have to study market profile prior to joining us, Kenneth. Not at all. Not at all. What I do is there are 4 concepts in market profile that are important. The rest of it is a huge waste of time. I love market profile. I love the people who brought it to us. But unfortunately, if you're a pure market profile trader, it's very hard to trade pure market profile. So what I did was I took those 4 concepts of market profile and I helped people who use candle charts because most of the world uses candle wax. And I adapted it so we use practical aspects of market profile only. And those are poor high, poor low, single prints, and where the cost basis is. Because what market profile does is it tells you very quickly where the accumulation and distribution of your inventory is and where your inventory is priced. So if you're a distributor, you know, hey, listen, they're not buying it at $5. Let's lower the price to $4.75, right? And you can use candle charts just the same way. So you don't need to have market profile to join us at the Trading Syndicate. My goal is to make trading simple so you can execute. right? It's not easy, but trading is simple, right? Wholesale buys a lot of cheap stuff, sells it at a profit. If they can't sell it at a profit, they put it on sale. You follow the path of that and you trade accordingly. So basically, there's only two trades, right? Trades are based on two simple things. One is there's no supply, you go long, you become the supplier when price goes up. There's too much supply, you go short because suppliers and sellers are going to mark down price. So you sell alongside. That's it. There's nothing else, right? Either goes up, down, or sideways, right? The candle chart tells you a lot of information, right? Candle charts are great because they tell you a massive amount of information like where the sellers are, right? So all you got to do is just put aside the wicks and twicks and upside down cup and handle, tea kettle, coffee pot, all that stuff. Just take a breath on that, and you'll be able to see where the sellers engage into a market. So right now, sellers are engaging here. The reason is the top of these candles. The top of the candle is where the sellers engage. How do I know that? Because I created candle tops, right? That's where sellers engage because they have to compete, right? So if Kenneth is selling and James is selling and Mike is selling, right? And Raj is selling, and one of them lowers price, they all lower price, right? To compete, to capture the buying, right? When they see that buyers are lined up here, look at this level as a glass door. When you see buyers lined up, you raise price. Simple. If you see buyers going back into the parking lot, walking to their car, you lower price. Hey, come back, I'll give you a good price. Get it? Does everybody understand that? The concepts are ridiculously simple. The execution is difficult. The execution is difficult because the market's never the same twice. So what we do is we craft a trade plan that lets you take advantage of the market when it enters your terms and conditions to do business. So that's when you take trades, right? When the trade enters your terms and conditions. I only do business when this happens, right? And this is where I put my risk. There's a business reason for taking a trade, right? There's a business reason for staying in the trade. If you go into a trading room and you ask the educator, what's the business reason for taking this trade? And they give you some double talk, it's got to be simple, right? So for example, say you wanted to take the trade long here, right? Say you wanted to go long at 10 and a half, okay? What's the business reason for going long 10 and a half? It's that you think price is going to go higher, right? And you can sell it at a higher price. So if somebody offers the same product at 9 and a half, and then 9, and then 8, is the business reason still valid for you being long 10 and a half? Why would you buy something at 10 and a half to sell it at 12 if someone's offering it at 9? Make sense? I know it's Monday morning. You guys awake? Same with shorting, right? Hey Dan, how you doing? Right. Now we got 10 minutes till London opens here. So now we're above that level. Let's see if we can stay above 10.5. I don't see a short just yet. Everything we do is based on common sense, Kenneth. So speaking of common sense, give us a shot at the trading seminar. You know, use the 25% off coupon or the code coupon. I sound so old. You know, it's less than 50 cents a day. It's cheaper than going to Starbucks every day, and you won't get indigestion. And, you know, we'll teach you how to trade with common sense and business savvy, right? We'll teach you not to blow up accounts. Words like FOMO and tilt and all that weak ass shit, excuse my language, we'll get rid of all of that so you can be a proper business person, okay? You'll learn how to use those funded trader accounts like our friends at Apex. There's a discount code, right? We'll cure you of all of that horrible, horrible business lack of discipline that traders use. Tilt, FOMO, revenge trading. All of those terms have no place in a proper place of business. You'll never hear anybody talking like that in a business environment. And trading is a business, right? The only reason you can't control your emotions and you need Dr. Phil is because you don't understand the business. If you understand the business, like right here, that's a poor high. What does that mean? That means that sellers are competing at that level. What's the practical information off of that? Well, if you were long at 11 and you knew that there's a seller at 14, you'd sell into it here. That's still a poor high. It's got one tick of excess. Yeah, it's been a long weekend down with the news cycle, eh? So if you know where other sellers are selling, jump in front of them, right? If you're long at 11 and you know they're going to sell at 14, sell at 13 and a half. Capture the buying, get paid, turn that inventory into cash. I did not know that, Moran. You know, I think every morning we'll have Moran's fun facts. Yeah, I tried not to watch the news this weekend. Let's see, let's fix this poor high. Let's see if we can fix the poor high. See how they're selling into it here at 14 quarter? Now let's see if we get a print. Oh, poor high is fixed. 2 ticks. That's a proper high. Let's see if we can stay above 14 now. Yes, finding inventory net long or short is easy. That's why the market's going up. Good crash. Karsh, I can't, I'm sorry if I hope you're pronouncing your name properly. Right? If inventory is short, there's a 70% chance that it'll correct long. 60 to 70% chance. If it's long, there's a 60 to 70% chance that it'll correct lower. Now, here's the thing. If inventory is net short and it doesn't correct upwards, the market is trying to say, hey, psst, buddy, buddy, psst, psst, psst. Business is a little different. Be careful. Know what I mean? Right? The chart, when the chart and the market differs from regular normal business practices, it is trying to tell us. It's very simple, right? Just listen to the chart. Now, you guys are all too young to have heard the saying, the tape never lies. What's the tape? The tape is this. That's the tape. In the old days, it used to be on a piece of paper. Then, you know, they invented the LED, right? And now this is a rolling summary of all the transactions. The price tells us if people have to put it on sale or mark it up. So the tape never lies. The tape is now translated into a graphical format that we call a chart. The chart never lies. All you got to do is trust it. So yeah, we're on the new contract. All that witching stuff is over. The witches of Eastwick have gone back into their coven, right? So now all you got to think about is month end, Raj, and quarter end, right? It's the end of the quarter, right? So at the end of the quarter, you'll generally see asset prices being marked up if the order flow supports it, right? You always want to mark prices up at the end of the quarter because it keeps people happy to see their money growing and they keep giving you more money, right? You don't want to have unhappy customers, right? And order flow is just a fancy way of saying customers. Look, see how there's a seller at 13 quarter? Check it out. You see that? See how they're competing at 13 quarter, 13 half? See? How do you use that information in an intelligent way? So if you're a short seller and now you're shorting the back end of this move, right? Well, see, they heard me, so they popped it above. But what you would do is you would short underneath that line, put your stop above it, and then look to cover here. But right now we're in distribution, so it's kind of hard to short distribution. So let the large traders distribute it out, right? So you're saying, JJ, you haven't taken a trade. Where would you take the trade? My trade would have been here, had I been up and running. When the market did this, came back, couldn't take out this 6,002, long 3, 4, stop 2.5, and then sell into your next level, which is 8. So say you bought 10 contracts here, 2, 2, 2, 2, flat. Thank you. Is there a threshold for overnight inventory where, in your experience, it indicates it's unlikely to correct? No. See, I've never been a stats guy, Dan, and I think that's the only thing that saves me, is that I don't look at stats. So I'm completely uninformed. Because when I started retail trading, I had a problem with bias. If somebody gave me a stat, I would cling on to that stat. They'd say, oh, it's only supposed to do this, or it's only supposed to do that, or 80% of the time it does this, or blah, 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 right? And I would trade in that direction and, of course, not do well. So what I learned because of myself is to be completely I'm like I'm like Gomer Pyle. If anybody remembers Gomer Pyle, right? I'm completely, well, golly, I don't know what it's going to do. And then the market will tell me, right? So what I do in the morning is I take test trades, right? See, that short would have worked, right? If we've been short 13, like stop here at 14, little cover at 10, right? You short when you see the seller. You see how the seller's engaged, then you short and you sell alongside. Does that make sense? I'm a little slow because I went to bed at like midnight and woke up at 5 a.m. But really, that's how you short. This is the front end of the move. The sellers show themselves. That's the back end of the move, and that's when you execute, right? So what I do is I take test trades to see if my bias is working, right? If I'm thinking long and I take a test trade and I get stopped out, then I'm like, oh, geez, wait a second. Maybe I'm too early. Give it some time. Take another test trade. And I use the micros to test, especially in the morning, to test and see whether or not. Here comes London. London's open. Let's see if we can get up over that 13. Here we go. Give it the old college try. Watch that white line. Tag to the tick. I haven't taken anything so far. I've only been on stream for half an hour. I will. Right? I'm watching. Right? Now, a lot of people who trade retail, they think if you're not in a trade that you're not a trader, and that's great. I'll see you when your account blows up. Professional traders spend 99% of the time watching, 1% trading. Right? Right now, I've got my elbows on the desk and my arms are crossed. I'm not even touching the mouse. So I'm just watching this market to see where the order flow comes in, where the sellers are. Once I have a good understanding of what the hell's going on, then I'll start taking trades. Do you understand, Pandy, that you have to kind of use a little bit of intelligence when you're trading, right? Otherwise, you're just the sucker at the casino with a bucket of quarters. Make your trades count, right? Make your trades count. That's why retail traders lose a lot of money, because it's so easy to take trades. Click, 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 click. Oh, I blew up my account. Right? Of course. Of course you did awfully at the open because you had no clue what the hell was going on. How could you possibly do proper business when a market gap's down and you're a retail trader? Right? How the hell are you expected? There's no way you could be expected to do well. Right? You're just peeing in the wind. It's not going to end well for you. Right? Learn the business. Learn when to do business, when not to do business. It'll save you a lot of money, right? When a market's choppy like this, just leave it alone. They're in distribution now. Do you even know what distribution is? Do you understand that there's a wholesale element in these markets? And right now they're distributing. They're distributing between 10 and 13. So now if you're a really fast trader, you could buy 10, sell 13, right? But if the candles start getting smaller and smaller and smaller, the less opportunity there is. Do you know why the candles are getting smaller? Because there's less order flow. Order flow is just a fancy way of saying customers. So you have to understand what you're doing because you're trying to transact business in a marketplace. If you don't understand the business, why are you transacting? You should be sitting and learning. Right? If you were like a medical student, would you just go in and start chopping away at somebody? Hey, let's do some surgery here. I don't know what's going to happen, but hey, I need to cut. Does that make sense? There's got to be a business reason why you're taking the trade. And if the business reason is not clear, why would you put money at risk? Yeah, right? Dumb money was shorting the hell out of the open of Globex, right? What's up, citizen? Hey Howard, how you doing? I'm gonna start calling you Howard the Pock. The overnight Pock is 59.93 and a half. Don't get sucked into price action. This is all intended to suck you in. Don't fall for it. Right? Learn when to do business. Learn when to do proper business. Right? It's amazing. And it's unfortunate because there is so much bad information out there for traders. People will tell you all sorts of stuff. They'll talk about liquidity and unfinished business and all sorts of nonsense, right? Sweeps and sweepstakes and brooms and frickin' vacuum cleaners and all this BS. It's all BS. Here's the thing, folks. If you're shorting a market, you have to have a valid reason. If you come to the trading syndicate, we'll teach you how to short. There's got to be a seller, right? In the old days, you'd never short a market unless you knew that there was going to be a sale, right? Somebody would call you and go, hey, there's 3 million shares going to hit this stock at $5. You go short 20,000 shares, right? The 3 million shares would knock the stock from 5 down to 4, 350. You cover, right? Have some common sense when you're shorting. Just because it's too high and value area high and don't worry about all that stuff. Look for a seller. Here you got sellers. The only problem is, right? Here you've got sellers, but they stop selling here, right? And what did I say? The candles are getting smaller, right? As the candles get smaller, business is slowing down. So you don't even trade this. You only short when you find a seller. The market goes up, the sellers start to compete. That's why prices go down. So you short. You put your stop here, and then you put buy orders in so the market comes down and hits them. Now, if the market doesn't hit your buy order, it tells you that there's no frickin' supply, right? All you short sellers who lose money, you're getting high on your own supply, right? Two rules that you get from the movie Scarface. Number one, never underestimate the other guy's greed because you get your face ripped off. Number two, don't get high on your own supply. Unless you can identify sellers are competing and that there is supply in a market, don't short it. Because the markets are not structured for short sellers. That movie, The Big Short, was just sucked everybody in. Right? Ooh, shorting is really cool. Right? Markets are structured to go long. Capital appreciation. Right? They even changed the rules. Do you guys even know in 2005 they changed the rules to minimize the amount of short selling in the market? Do you guys even know that? Learn the business you're in. Let's see if we can take out the open. We're above that 13.5 now. Of course you didn't. How could you? Right? I don't blame you guys. You just have bad information from people who don't know their butthole from a hole in the ground. Right? 2005, Regulation SHO changed the rule for retail shorting. Right? It took the retail short effectively out of the market. Lower interest rates, tighten supply, learn the business. Another poor high. Let's see if we can clean that up. 25 is the upper target. First 18. Let's see if 18 is reactive. It's not crazy we're not tanking, Big Dave. There's no supply. Don't get high on your own supply. You got to have sellers competing. Look at that. Who wants to short this? The cost basis is underneath us, Bubba. Right? Inventory is short. It's correcting upwards, just like we said. The trade is long. There we go. The thing is, folks, don't get sucked into what the media tells you. Don't get sucked in. Let the chart tell you what's going on. So what happened here? This little chop zone, what did that do? That attracted buyers. And the people who were short finally said, oh crap, we better start covering. Once they started covering, you got this big move up when you took that K high, took the stop up. Look at that. Boom. There you go. Have a nice day, shorts. Nice trade, Moran. Nice trade. Beautiful. What did we say the target was the close? We're pretty close. Now what we're going to do is we're going to backfill. Beautiful trade. Right? Now we're going to backfill. Right? So what does a backfill mean? You take a market up to create demand. Now you go in and you fill in that demand with supply. This is common sense. This is business. Right? So right now, pretend you're in Walmart. Attention Walmart shoppers. Right? For the next 2 minutes, ES is on sale, 2 for 1. Right? Or Pepsi's on sale. Or Coke's on sale. But get them while they're hot because the sale's not going to last very long. That's what a backfill is. A backfill entices buyers and allows wholesalers to take price back up if the order flow supports. The order flow has to support your agenda. I would love to sell 100 million shares of stock in a deal at $20 a share. But what if nobody wants to buy it at $20 a share? You ever think about that? Yeah, the inventory of the overnight is well below us now, Raj. So now we're in distribution. Or as my buddy Addy would say, distribution. JJ, we need big, big distribution. There's the close. We told you. We told you 45 minutes ago that the target was the close. No reason to short this thing. No singles last night yet, Raj. P formation. Good excess at the bottom, right? What do you mean by that? Are you watching my screen? There you go. Okay. Business as usual. Now what we're going to do is we're going to backfill, right? Now, if you're short, now this is a market profile short. Let's go try this, right? So I'm going to short it. Let's see. I'm short 24 and a half. I'm offered at 3/4, right? So I'm short one at 24 and a half, right? Stop is above the close. I got a bid in at 22 and a quarter. Oh, hit me, you dirty, rotten bastard. I'll move my bid up to 22 half. And if they don't, I'll just take the offer. Flat at 22 and 3/4. Okay? So that's why I shorted it, because I knew that we had sellers at the close. So I hit that, put the stop here, put some bids here, right? And I shorted the backfill, right? Right? I covered a little too early because it was just one contract. I need some more coffee. That is for sure. Do you see how that trade makes sense? Because I found sellers at the close. So you short underneath the close. You don't have to call the top, right? You short, you put your stop there, and then you put your buy orders in. Does everybody see that? That is a short that makes business sense, right? If the short doesn't make business sense, there's no reason to take it, right? Looking for 18 bids. Does everybody see that? This is the backfill, right? So that's just competing sellers. If you're still short and we offer under 18, you can stay short until about 14 and a half, 15. There'll be a little position here. You'll see it kind of, if we don't have a lot of competing sellers, we'll kind of slow down here. Of course, that's the business, right? People who chase price get trapped. They start to sell. The people who own it under 14 can undercut their price, right? The backfill, or as James says, the bathfill. Right? There's that 15 and a half. Come on down. The price is right. Right? We're going to come into, what is this? This is just a cost basis, ladies and gentlemen. Right? So you put it on sale. Nobody wants to buy it. You bring it back to cost basis. If nobody wants to buy it, then you'll mark it down under 10 and we'll come back into the 6 sevens. Nice distribution. We use the trap shorts to push the market higher so we could sell at higher price. Right? We had bids at 18, but they ran away because they saw sellers. You'll see this pattern happen in every time frame. So what we do is we teach you how to trade it on a 1-minute time frame. Right? We teach you how to trade it using the micro so you don't hurt yourself too badly. You know, because when you first start trading, you're going to be moving like a pregnant yak. You'll be falling all over the place, screwing up trades, right? That's just to be expected. Nobody comes out of the womb knowing how to execute, right? I've never seen anyone sit down without zero training and be able to trade, right? And, just learn. Spend some time learning, right? See how we stopped right at the white line and it's kind of slowing down, right? The sellers come back to where they paid for the goods, they slow down. Now the shorts are going to come in and start covering. If the shorts see that there are desperate sellers, they'll drop their buy orders under 13. Watch. See? Boom. Little action. How do you know when there's a bid? Because I watch. The offer will move higher. You see these red and blue and green lines, sorry? The red line and the green line, Neto? The green line is the offer. The bid, sorry. Good God. Excuse me. So the green line is the bid, the red line is the offer. Okay? The offer is the lowest price that people are willing to sell at. It's also called the ask. When the ask starts moving higher, it means that it's seen bids. The market will tell you. You don't need any fancy software. You don't need to spend thousands of dollars on all that crap, right? So, did I grab that long? Was I long 14? I didn't get a fill. Dang it. I was flapping my gums. I didn't get a 14 fill. I was trying to buy 14 against 13 and a half, 13 to sell the 18s. Oh well, right? Always the next trade. Missed that bus. See, the sellers will be here. Does that make sense, Neto? When you see that red line start moving up, that means, ooh, they saw buyers. They're going to raise price. Now just watch that red line. See how it's going above the white line? Right? And now the sellers will start to compete again. Nice action tonight. Very tradable. Very tradable. Makes sense, right? If you're a seller and you see buyers, you're going to raise price. If you're a seller and you see that somebody else is stealing your customer, you're going to lower price, right? It's just common sense, folks. Right? Just a little bit of common sense, a little bit of discipline, and a lot of time. The 10 video course is good. And what I'd offer you is if you're into that, DM me and we'll talk. I mean, if you're serious about trading, give me a ring before you spend any money, right? And that's with anyone. Give me a DM, and if you're going to spend money on courses and stuff like that, I think at least I owe you a phone call. We can chat on the phone, and I can see if I can help you with your trading. Okay? Right? And I offer that to anyone. Anyone who's interested in buying a course or mentorship or any of those things, reach out to me. Let's take 20 minutes, half an hour, talk on the phone and see, maybe you can just join the room. Maybe the course is for you. You know, I'm I don't want people to spend money unnecessarily and that's going to get me into trouble with my partner, but I'd really like you guys to reach out, get some assistance from me personally, and let's see where you're at and see what product is best for you. Okay? Or if you just join the room and spend some time with us and learn, right? You know, I understand there's money involved and you guys have time, you have work and job and children and hockey practice and all of this stuff. You know, let's make it worth your while, right? So I'm on X, I'm vwaptrader1, right? Also, you can, if you're having trouble, I don't know how Twitter is these days, um, but here is my Gmail address. I'll be happy to do a call with you. See how those sellers are there at 20? So if you were long 14, 15, you'd know that's probably an area where you want to take a little bit of profit before somebody else grabs your customer, right? The thing about trading on a screen that I learned from floor traders is that there's no sense of urgency, right? When you're on a trading floor or you're trading on a desk, there's a sense of urgency to sell or buy before the next guy does and gets your client or your product. That doesn't come through on candles, on any kind of chart. There's no sense of urgency, right? And that's hard for retail traders because they don't understand that there's a business that's actually going on behind these charts. A lot of them are told that this is random. How can you have billions of dollars moving around the world in a random fashion? Does that make any sense at all? No, right? None of this is random, right? So now 20 to 23. Let's see if we can go up to 23 now. Now, unfortunately, anyone who's short under 16, 18, they're holding the price up again, right? How's the... I just did this oil chart last night, so I don't know how well it's gonna... The 78 and 78.48 seem to hold on the upper side. We'll see. We'll give it some time. I haven't looked at oil in a long time. I don't actually trade it. I just do levels for people who do. Any other questions before I sign off? I want to thank everyone for being with us. Remember, if you're a short seller, wait until you see that seller. Then you'll see people compete with that seller. And that's when you want to get in there, right? Wait for somebody else to get in there and start selling, right? You don't have to be first, right? You don't have to be first. It's not Talladega Nights, right? You don't have to be Ricky Bobby. If you ain't first, you're last, right? It's not stock car racing, right? Uh, Big Dave, I trade when my setup is there because I'm in London, right? Um, so I trade UK hours, but I do a stream at 9 o'clock in the morning Eastern time. So I do two. Now, we did a survey in the room, and it seems like people want me to do more streams. So I usually keep it to two a day. We'll see if maybe I'll start doing more if the demand is there, right? Maybe some more streams during live market hours. I don't know. Try and give the people what they want. You know what I mean? Thanks, folks. Have a good morning. Be careful out there, okay? Still a little wonky, so just, head on a swivel, hand on your wallet, you know, as my offensive line coach used to say back in the old days. Have a great morning. We'll see you folks later at 9:30. Bye for now.